Fantastic. I've always wanted to perform at a matinee. And here I am on the bright lights looking out at the audience. What a great opportunity. Thanks very much to MSD and Investability for this opportunity. What a great introduction to Fenix. We've just had three of the smartest minds in investment talk about every commodity under the sun except for iron ore. I heard a lot about gold, Dr. Copper's on its way, nickel might be contrarian. What about coal, uranium, anything you want, except for iron ore, which perhaps is understandable. I went out to Diggers and Dealers last year and looked at the stats. Nickel, about a couple $100 million to the state government in royalty revenue. Gold leading the way out there in the home of the gold companies, $400 million. Quite surprisingly, the forward-facing metals, lithium, already providing $800 million in royalty revenue on an annual basis to the Western Australian state government. Not a single iron ore company presenting in last year's Diggers and Dealers. Luckily, Neil and his colleagues have done something about that, and Fenix will be presenting this year. Iron ore companies gave $10 billion in royalty revenue to the West Australian state government last year. It'll be more this year. Increased production and very strong prices. The biggest companies in Australia in mining have been built on iron ore, and the richest people in this country are current iron ore miners. So think about that if you're looking to where to allocate your capital in this difficult market where it's so tough to make money. And think about that a little bit as we go through it. I just wanted to frame that don't ignore Fenix because our underlying commodity is iron ore. It's a huge market. It continues to be robust, and we're making a lot of money out of it. This is a very short presentation that's a version of what's currently on our website and our platform. We have three pillars in our business. We focused and we started, like many, as a resource company with a stranded project, and that's the core of our mining project, the success we've had at Iron Ridge. Increasingly though, mining is only one part of our business. We're a logistics provider. We have a wholly owned haulage and logistics company. It provides a service at a cost lower than any other bulk commodity on-road transporter in the world. And we have a third pillar to our business built around infrastructure at the Port of Geraldton. And they're all independent of each other, but they obviously work together. Let me take you to the mining side of our business and have a talk to the Iron Ridge one. You can see the ore body there, beautiful 30-metre thick, 65% in situ iron ore. This mine was commissioned in 2020 on a very short time scale. We're mining 1.3 million tonnes per annum of high-grade iron ore. It's a very simple one digger, four truck operation. We have Macca Mining as our mining contractor. They also run this crushing and screening plant that you're seeing. A very simple, beautiful, clean ore body. We're 4 million tonnes into this mine. We've got another 4, maybe 5 to go at exactly the same run rate. You can see that ore body straight down the middle there. We produce a 64% lump product and a 63% fines product. So both of those products command a premium to the 62% iron ore index price you might look at. There's our product stockpile. Very simple operation, very consistent. We produce between 100 and 120,000 tonnes of ore a month. That is currently hauled 500 kilometres on public roads in our Fenix New Haul fleet of trucks. They're a quad road train. They're 65 metres long. They operate under provisional licences, and they arrive 500 kilometres later at our company-owned facilities at the Port of Geraldton. We own the only side-tipping truck unloader. We own 85% of the on-wharf bulk commodity storage at Geraldton Port. All of our sheds are connected to the rail unloader. And we load Panamax boats. About half of our material goes to China, and the other half in Panamax shipping routes goes to Indonesia, Malaysia, Vietnam, and customers that we've established in markets closer to us. That's a very quick introduction to what's been a real success story. We raised $15 million from the market in 2020. We've since paid back $65 million in fully franked dividends, and we ended the last quarter with close to $90 million in cash. So if you're out there complaining about the junior resources world, Fenix is a company that on a bad month, we make $5 million of positive operating cash flow. We've got a market cap of $200 million, so the EV of the company is pretty much going for free. It's quite a complicated map. I don't have a lot of time. Iron Ridge, the mine you just saw in the video, is up here. What was previously thought to be a stranded iron ore deposit from Geraldton. Over the last 18 months, we've expanded our portfolio considerably under three major transactions. The first one was consolidating the ownership of our haulage and logistics business, the New Haul business, started by my fellow Executive Director of Fenix, Craig Mitchell. We own 100% of that business as a $25 million transaction. It's a remarkable business. The second transaction is we acquired all of the infrastructure of Mount Gibson's iron ore business in the Midwest. Mount Gibson had produced 50 million tonnes here, 25 roughly from Talon Peak and 25 from Extension Hill. We acquired all of the One Wharf storage facilities and related infrastructure you saw in the video from them. We acquired two rail sidings, one at Riverdini and one at Peringeri, and we acquired the Shine iron ore mine, as well as a whole lot of other redundant assets that we've largely got rid of. Shine's got 15 million tonnes of iron ore, it's shovel ready. The Riverdini and Peringeri rail sidings give us a unique assembly point for iron ore, as well as potentially access to the Midwest rail system. And I mentioned how strategic we believe the port is. That transaction gives an insight as to Fenix's changing model. We started focused on Iron Ridge and an opportunity to unlock its value. We're now looking at a broad-based industrial business in the Midwest, providing port services, logistics services, and mining. So on the back of that, we've acquired a number of third-party logistics customers, CuFe and Gold Valley, iron ore miners from Wiluna. We're talking to a range of other potential and existing producers in the Midwest as to how we can help them with haulage and help them with port services. We acquired 500,000 tonnes from a private iron ore miner at Twig Peaks, and we've started shipping that material. And the third major transaction, and possibly the most significant, is we acquired a 10 million tonne right to mine from Sinosteel Midwest Corporation on the Beebyn W11 deposit, which is 20 kilometres away from Iron Ridge. That's significant not just because it gives us an opportunity to replicate the cash flow, profitability and success we've had at Iron Ridge in exactly the same part of the world with a very similar ore body. It's significant because Sinosteel own and control 290 million tonnes of hematite within 60 kilometres of Iron Ridge. It's stranded. We want to unlock it. We believe we can build a huge company on the back of that. That's our story. I spoke to you a little bit about the Geraldton port infrastructure. You can see it here. We think these are really significant. We think it's an infrastructure asset that you can work backwards from. They're irreplaceable, and if you want to export any bulk commodity from the Midwest region, and obviously there's iron ore deposits, there's manganese deposits, there's a lot of feasibility studies going into forward-facing metals, spodumene, vanadium, potash, silica sands, talc, garnet, and a range of other commodities. The alternatives here are very limited. You're either using off-wall storage and very high-cost, inefficient solutions, or you've got to find someone, aka Fenix, who can deliver your material efficiently, warehouse it at the port, and put it in a boat for you. And we're keen to do that for ourselves and for our customers. There are 110 projects currently going through feasibility study in the Midwest across those commodities. So it's an area that we think we can grow in as we expand our iron ore business. Our plan going forward, in the half year to December, we had about $125 million in revenue and $45 million of EBITDA. We've seen some weaker prices since then in iron ore, but we're confident we'll more than double those figures in the full year on the back of an increasing third-party logistics business. So we're heading towards an $80 to $100 million EBITDA number for the full year, which is roughly the same as our enterprise value. That's an opportunity. Number one focus for us is to continue the success of Iron Ridge. I mentioned we're halfway through that mine. It's been a great job to date. It's been very consistent. We need to keep going with that ore body. We're expanding our iron ore production. This is the second limb of our strategy. During the current quarter, we will publish feasibility studies for W11. It's going to be a similar outlook to Iron Ridge, 1.5 million tonnes a year, $20 to $25 million of capital, with, we think, similarly positive outcomes. We're making a decision on the Shine iron ore mine that we acquired off Mount Gibson, and a decision to mine Shine and a timeline on W11 will give an outlook on what we think is a 3 to 4 million tonne per year production profile from Fenix over the next several years as we look for further iron ore opportunities. We're expanding our third-party business. Last quarter, we announced a $70 million logistics contract with Gold Valley. We're in discussion with a number of other potential customers in a range of different commodities. We've got scope to add significant third-party business to our logistics business, so stay tuned for that as a separate profit generator and revenue stream for the company. And the last point is we're looking at other growth opportunities. As you can hear, I'm very confident that there's a lot of money to be made in iron ore going forward, and particularly iron ore in the Midwest. It's been a huge investment area for 50 years. Fenix has got the opportunity to unlock that investment in iron ore. But equally, we're in a very interesting part of the world for some of the very good comments from the panel we've heard today and the investment landscape. There is enormous capital going into a range of projects in our area, most notably wind production, hydrogen production. The state government are putting $350 million into the existing port, largely for our benefit. There are a range of proponents looking at downstream DRI and green steel opportunities in the Midwest. From a logistics provision, from an iron ore provision, and potentially from a downstream product potential, we think Fenix can play a huge part in that investment model. It starts with doubling and tripling our current production, doubling and tripling our current profitability, building a very strong, very robust balance sheet, and taking advantage of the opportunities in front of us exactly the same way we have over the last several years. It's an exciting story. It represents enormous value currently. Get on board, join us on what's going to be an exciting journey. Thanks very much to Danik and the team.